Hi students, 12th Standard Accountancy, Chapter-5, Admission of a Partner, Exercise sum number 25. Sundar and Suresh are partners sharing profits in the ratio of 3:2. Their balance sheet as on 1st January 2017 was as follows. Liability items are capital account, creditors, general reserve, workman compensation fund. Asset items are buildings, furniture, stock, debtors, bills receivable, bank. They decided to admit Sukumar into partnership for 1/4 share in profits on the following terms. Sukumar has to bring in 30,000 rupees as capital. His share of goodwill is valued at 5,000 rupees. He could not bring cash towards goodwill. That the stock be valued at 20,000 rupees, that the furniture be depreciated by 2,000 rupees, that the value of building be depreciated by 20%. Prepare necessary ledger accounts and the balance sheet after admission. Listen here carefully. They have asked us to prepare ledger account and the balance sheet after admission. But we need to prepare the ledger account, which means revaluation account, capital account and balance sheet. If they didn't ask us to prepare the capital account, we need to prepare the capital account. Why? Because when we prepare the ledger account, which means revaluation account, whenever we prepare the revaluation account, we will get loss or profit of the revaluation account. That loss or profit of the revaluation account immediately transfer to the old partner's capital account. So that revaluation account transfer to the old partner's capital account will be shows on capital account. Okay. Then they have given the question general reserve and workman's compensation fund. Okay. General reserve will be distributed to the old partner's capital account. So it will be appears on capital account and workman compensation fund also will be distributed to the old partner's capital account with their old profit sharing ratio. It will be appears on capital account, and they have given in the capital account the question only opening balance of the capital account. We need to find out the closing balance of the capital account after all the adjustment. Okay, so after all the adjustment in the capital account only, you will get the closing balance of the capital account. That the closing balance of the capital account only will be appears on liability side of the capital account in the liability side of the balance sheet. Okay, we can't enter the opening balance of the capital account they have given in the question. We have to enter the closing balance of the capital account on liability side of the balance sheet. Then only the balance sheet answer, you will get the same answer on both assets and liability side of the balance sheet. Okay, so we need to prepare the capital account even though they didn't ask us. Okay, illustration sum number 25, they didn't ask to prepare the capital account, but in the solution they have prepared revaluation account, capital account and the balance sheet. Okay, in this way, exercise sum number 25, we need to prepare the revaluation account, capital account and the balance sheet. Okay, listen here. They decided to admit Sukumar into the partnership firm for 1/4 share in the profit on the following terms. Listen here carefully. This is the new situation. Exercise sum number 25. Here is the new situation. New partner whose name is Sukumar, whose share of profit is 1/4. How can he get 1/4 share? Old partners sacrifices their share of profit only. New partner will get the share of profit. Right? If old partner sacrifices their profit only, share of profit only, the new partner will get it. Okay. They didn't mention who the old partner sacrificed their share of profit, the new partner will get it. Okay. If they didn't mention their old partner's name here, sacrificing partners in name here, we have to assume both the old partners Sundar and Suresh, both the old partners sacrifices their share of profit in favor of new partner only. New partner Sukumar will get 1/4 share of profit. Okay, this is the important point. Okay, Sukumar has to bring 30,000 rupees as capital. Sukumar is a new partner who brings 30,000 rupees capital. It will be appears on capital account. Okay, it will be shows on capital account. His share of goodwill is valued at 5,000 rupees. He could not bring cash towards goodwill. Listen here. Whenever new partner enter into the partnership firm at the time of admission, new partner will bring capital and share of goodwill. Okay, here Sukumar is a new partner who contribute 30,000 rupees capital, but he didn't contribute his share of goodwill 5,000 rupees. If the new partner Sukumar can't contribute share of goodwill 5,000 rupees, it will be taken from his capital 30,000 rupees. Okay, so we have taken 5,000 rupees share of goodwill, Sukumar's goodwill from his capital 30,000 rupees. Okay, so capital account decreased. We need to compensate that goodwill value. We compensated that goodwill value 5,000 rupees taken from Sukumar's capital, immediately transfer or distributed to the old partner's capital account with a sacrificing ratio. Why? Because old partner sacrifices their share of profit only. New partner Sukumar will get 1/4 share of profit. Okay, so that goodwill value, that share of goodwill, new partner's share of goodwill will goes to old partner's capital account with a sacrificing ratio. But here they didn't mention the sacrificing ratio. What we have to do? We have to consider the old profit sharing ratio as the sacrificing ratio. Okay, old profit. So what is the journal entry? Sukumar's capital account debt of 5,000 rupees to old partner's capital account. Capital account. Who are the old partners? Sundar and Sukumar. Okay, so that 5,000 rupees will be distributed to the sacrificing ratio. That means old profit sharing ratio. After, so that 5,000 rupees goodwill, Sukumar 3:2 is the old profit sharing ratio. That means sacrificing ratio. 3 for Sundar and 2 for Sukumar. After cancel it, you will get 3,000 rupees for Sundar's capital account, and after cancel it, Suresh capital account, we distributed that goodwill value. Okay, and then that the stock be valued at 20,000 rupees. We already have the stock 25,000 rupees in the question on asset side of the balance sheet. So that stock value will be decreased from 25,000 rupees to 20,000. So stock value decreases, asset value also decreases. If the asset account decreases, it will be debited. In simple way, you can't interested to pass the journal entry because they didn't ask us to pass the journal entry. Okay, you want to directly post the ledger account or revaluation account. There is a simple method. What is the format? Whenever asset account decreases or depreciated, the asset item will be appears on debtor side of the revaluation account. Simple. Okay, here stock account is the asset account. It will be decreased from 25,000 to 20,000. So asset account decreases, it will be entered on debit side of the revaluation account. To stock account 5,000 rupees entered. Okay, then that the furniture is to be depreciated 2,000 rupees. We have the furniture 13,000 rupees in the question. So it is depreciated, 2,000 rupees depreciated. So asset account decreases. What we have to do? Whenever asset account decreases, we have to enter the asset account on debtor side of the revaluation account. To furniture account 2,000 rupees entered. Then that the value of building be depreciated 20%. Building's value 40,000 rupees is given in the question. From 40,000 rupees, 20% means 1020 is to be cancelled. 4 2s are 8, 40 is to 20 is to be added here. Okay, so 8,000 rupees, right? So building account is depreciated, asset account also depreciated. If the asset account depreciated, revaluation it will be appears on debtor side of the revaluation account we entered. So revaluation account related transaction we entered here. Now we are going to find out the balancing figure. How can you find out the balancing figure? Which side you will get the higher value, that side we consider as the total. Okay, so first we need to find out the balancing figure. We need to calculate the total. So which side we calculate the total? Higher side we have calculated the total. So 5,000 plus 2,000 plus 8,000, you will get 15,000 rupees. The same 15,000 rupees total we are going to enter it on credit side in the same horizontal line. After you enter the total, you have to draw two lines, which means that is denoted as total. Okay. After draw the two lines, you are go to lesser side. How much rupees the differences? 15,000 rupees. So the balancing figure is 15,000 rupees. If you get the total on debit side, you will get the balancing figure on credit side. If you get the total on debit side, you will get the loss on revaluation on credit side. Okay. So that balancing amount 15,000 rupees you are going to write against the 15,000 rupees by loss on revaluation account. Okay, immediately that the loss on revaluation account is transferred to the old partners capital account with their old profit sharing ratio. Who are the old partners? Sundar and Suresh are the old partners. So what is their profit sharing ratio? 3:2. 3 goes to Sundar and 2 goes to Suresh. Okay. So 15,000 for 3 by 5 means 1 5 is 5, 3 5s are 15, 3 0 is to be added here, 3 3s are 9,000 rupees goes to Sundar's capital account, and same 3,000 rupees into 2, 6,000 rupees loss goes to Suresh capital account. Okay, immediately you are going to pass the journal entry. Where is the revaluation account balance you will get? You got credit side. Revaluation account balance is shows on credit side. So what is the journal entry? Revaluation account is to be credited. Which account is to be debited? Old partners capital account is to be debited. So who are the old partners? Sundar and Suresh. So Sundar capital account debtor 9,000 rupees to Suresh. Sundar capital account debtor 9,000. Suresh capital account debtor 6,000 to revaluation account 15,000 rupees. Right? So we prepared revaluation account. Now we are going to prepare the capital account. Okay. What is the format for the capital account? There are two sides, a debtor side and a creditor side. Same format. Particulars and respective partners on both debtors and creditor side we entered and rupees entered. Okay. Whenever you start the capital account, whenever you prepare the capital account, the first account, the starting account is opening balance of the capital account. They have given in the question opening balance of the capital account. They given in the question. Okay, Sundar and Suresh 30,000 to 20,000 rupees. The opening balance of the capital account, the format of the capital account is the opening balance of the capital account will always shows on credit side. Okay, so by balance brought down means opening balance 30,000 rupees, 20,000 rupees entered on Suresh and Sundar and Suresh. Okay. After enter the opening balance of the capital account, the next account is new partners capital account. First we entered old partners capital account from the question, right? That is the opening balance. Next account is new partners capital account. You have to enter new partners capital account after you enter the opening balance. New partner, who is the new partner? Sukumar is the new partner. Okay. How much rupees he bring the capital? 30,000 rupees, right? So what is the by bank account 30,000 rupees enter into Sukumar's column. Then after enter the Sukumar's capital account, that means new partners capital account. The next account you are going to enter revaluation account. What is the journal entry? Revaluation balancing figure, which means old partners capital account to revaluation account, right? So old partners capital account, where is it? It will be appears. Old partners capital account is appears on debit side. Listen, I prepared past the journal entry here. Okay. So what are the capital accounts is appear in the journal entry? You are going to enter in the capital account. Right? So the revaluation account balance is appear on credit side. That revaluation balance will goes to old partners capital account with their old profit sharing ratio. So, right, okay. So, what is the journal entry? Old partners capital account debtor to revaluation account. So, you go to capital account will appear on debtor side. So, you go to debtor side of the capital account and write the opposite account, that means revaluation account. 9,000 and 6,000 enter into their respective partner Sundar and Suresh. Okay. After listen, in capital account first you are going to enter the opening balance. Next, new partners capital account. Next, revaluation balance account. Next, what they given in the question, general reserve and workman compensation account goes to capital account. Okay. So in general reserve, how much rupees? 10,000 rupees given in the question. It will be distributed to the old partners with their old partners capital account with their old profit sharing ratio. So old partners are Sundar and Suresh. Their old profit sharing ratio is 3:2. That 10,000 means 3 by 5. After cancel it, you will get 6,000 rupees. So similarly, Suresh will get 4,000 rupees. So what is the journal entry? General reserve account data to old partners capital account. So old partners capital account is credited. So you go to credit side of the capital account and enter the opposite account, that means the general reserve account. By general reserve account, 6,000 rupees for Sundar and 4,000 rupees for Suresh we entered. Then workman compensation fund, same journal entry, workman's compensation account data to old partners capital account. So how much rupees workman's compensation fund? 15,000 rupees. It will be distributed to the old partners with their old profit sharing ratio. So 15,000, 3 for Sundar and 2 for 3 by 5 for Sundar and 2 by 5 for Suresh. After cancel it, 3,000, 3 3s are 9,000 goes to Sundar's capital account and 6,000, 3,000 into 2 are 6,000 goes to Suresh capital account. Okay. So workman compensation fund to old partners capital account. So the old partners capital account will appear on credit side. So you go to credit side of the capital account and write the opposite account, that means workman's compensation fund account. 9,000 for Sundar and 6,000 for Suresh we entered their respective columns. Okay. Then come to share of goodwill. The new partner Sukumar not contribute the share of goodwill 5,000 rupees. So it will be taken from Sukumar's capital account. So what is the journal? And immediately that 5,000 rupees share of goodwill distributed to the old partner's capital account with their sacrificing ratio, which means old profit sharing ratio. What is the journal entry? Sukumar's capital account to old partner's capital account. Listen here carefully. This is the new situation. Contra entry. How can you say in 11th standard bank reconciliation statement, 3 column cash book, right? Single column, double column, 3 column. In double column cash book, we did contra entry, bank account data to cash account. So you go to data side of the cash book and write to bank account and they enter 5,000 rupees in cash column. Similarly, here we have two capital. Debtor side also we have the capital account, creditor side also we have the capital account. Debtor side, what is the journal entry? Sukumar's capital account debtor to old partners Sundar and Suresh capital, which means new partners capital account debtor to old partners capital account. So both the side we have the capital account. So we get the contra entry in capital account. Okay. First we have take debtor side. Sukumar's capital, new partners capital account, which means Sukumar's capital account debtor. So you go to debtor side of the capital account and enter the opposite account. Go to debtor side of the capital account and enter the opposite account. Which is the opposite account? Sundar account and Suresh account. Okay. Sundar account 3,000 rupees and 2,000 rupees enter on Sukumar's column. Okay. Within the bracket you have to write goodwill and come to the credit side. On credit side we have old partners capital account. Okay, so you go to credit side of the capital account and write the opposite account, which means Sukumar's capital account. 3,000 enter for Sundar and 2,000 enter in Suresh column. Okay, so this is the new scenario, new situation in this sum. So we entered all the capital related transactions and the capital related accounting here. Now we are going to find out the balancing figure, which means so now we are going to find out the total. Okay, now we are going to come to the closing balance, find out the closing balance of the capital account. So which side we have the higher value, that side we are going to find out the total. Credit side we have the higher value. So 30,000 plus 6,000 plus 9,000 plus 3,000, you will get 48,000. 20,000 plus 4,000, 6,000, 2,000, you will get 32,000. 30,000 rupees entered. The same value you are going to enter the opposite side, 48,000, 32,000 and 30,000. After enter the total, you are going to enter, draw the two lines, which means denoted total. Okay, after now you are going to subtract the difference total from the lesser value, you will get the balancing figure, closing balance. So 48,000 minus 9,000, you will get 39,000. 32,000 minus 6,000, you will get 26,000. 30,000 minus 5,000, you will get 25,000. Against this, you are going to write two balance carried on, which means this is the closing balance of the capital account. After you enter the closing balance, immediately you have brought it down to the opposite side and enter below the total. The same value, 39,000, 26,000 and 25,000 rupees. Against this value, you are going to write by balance brought down, which means by balance brought down means this is the opening balance of the capital account for next accounting period. So we prepared capital account. Now we are going to prepare the balance sheet. Balance sheet as on 31st January 2018. Balance sheet has the two sides, that means liability side and asset side. Always you started with the capital account on liability side. Okay, so who are the old partners to bring the capital account? Sundar, Suresh and Sugumar. So Suresh capital value is 39,000, 36,000 for Suresh and 25,000 for Sugumar. Then the total value of the capital is 90,000 rupees. And what are the items related to liability side? They have given in the question, we are needed to enter here. Okay, creditors 50,000 rupees belongs to liability side of the capital account. So creditors 50,000 rupees entered. So respective liability side items we entered here. Now we are going to enter the asset side of the balance sheet as per the question. Buildings 40,000 rupees given in the question we entered. We have depreciation 20,000, 20% means 8,000 for buildings. So it is subtracted from 40,000 rupees, you will get 32,000 rupees. Furniture 30,000 rupees entered from the posting. 2,000 rupees depreciation. After subtracted, you will get 11,000 rupees. Stock value 25,000 rupees from the posting we entered. 5,000 rupees depreciation. We subtracted 5,000 rupees from 25,000, you will get 20,000 rupees. Debtors 15,000 rupees from the posting we entered. Bills receivable 14,000 rupees we entered from the posting. And bank 18,000 rupees we entered from the posting inner amount column. Sugumar is a new partner who brings the cash 30,000 rupees in the name of capital. So cash comes into the business. It will be added with the bank or cash amount. Okay, so Sugumar's capital account 30,000 rupees is to be added with the bank amount, you will get 48,000 rupees. So what are the accounts related to balance sheet, liability side and asset side we entered? Now we are going to find out the total. On liability side, total is 50,000 plus 90,000, you will get 1,40,000 rupees. Come to the asset side, 32,000 plus 11,000 plus 20,000 plus 15,000 plus 14,000 plus 48,000, you will get 1,40,000 rupees. So assets and liability side, you got the same total, which means equal total 1,40,000 rupees. After you enter the total, you have to draw two lines under the total. Okay, so do you have any doubt? Please comment it in the comment box. Thank you. Take care.